Hi, Jonathan York from Bay Financial Partners, looking at investment markets. At last, we seem to be getting some evidence out of the US now that potentially these tariffs and the sort of ongoing trade war that President Trump seems to be striking up with most sort of countries around the world seems to be impacting on the US economy. The latest manufacturing data coming out on the surveys was the worst in 10 years. So despite all these sort of talk and rhetoric and sort of spin that the US economy was strong and wasn't being impacted, it was China that was being impacted by the tariffs, their economy was suffering. There's now clear evidence that the US economy is suffering as well. Now, potentially does that play into the hands with the Fed looking to now sort of come to the rescue and cut interest rates even further? It'll be interesting to see how that sort of plays through. Certainly, the administration has been pushing for the Fed to cut interest rates. President Trump has been very critical of Chairman Powell and the fact that they haven't been cutting rates more aggressively. Now that's obviously quite interesting as we head into the election year in 2020. If the economy is starting to contract and we're starting to see job losses, it's going to be very hard for the president to campaign on sort of, make America great, creating jobs, getting manufacturing back into the US and job creation. But also just potentially as well, it does weaken his hand a little bit in the negotiations with China. If this is certainly a trend going forward now where manufacturing is starting to suffer and the economy is starting to contract a little bit, President Trump's going to be under increasing pressure to get that sort of trade deal done to get the economy moving again. And also as well, obviously President Trump facing increased pressure as well, this impeachment investigation taking place where potentially he has used his position as president to sort of influence foreign powers in terms of personal gain. The personal gain referred to is obviously with the Ukrainian president looking to investigate one of his political opponents, Joe Biden, in the 2020 election. Just possibly what we're starting to see is that President Trump realizing that it's not quite the same as running his own company. Running a country and being president of the United States operates under a different set of rules. Quite interesting, oil seems to have calmed down quite a bit now after the initial sort of spike after the Saudi attack. And, potentially things are sort of getting back to a more sort of normal level. Obviously, the issue could be that, if the US does manage to convince its sort of allies that Iran was responsible and they get concrete proof and there is some sort of military action, Iran then sort of takes some action on the oil, that potentially could see a little bit of a spike in price. Brexit continues to rumble on. We're now in October. 31st of October is supposed to be the hard deadline for the UK pulling out of Brexit. Prime Minister Johnson is still adamant that the UK will be leaving on the 31st. The issue has always been that there's no deal on the table at present. Parliament has passed a law that's saying that a no deal leave is not possible. But Prime Minister Johnson doesn't seem to sort of be playing by those rules and still feels that he can take the UK out of the EU without a deal. And possibly of a sign of things to come, the UK economy, if UK does leave under a no-deal Brexit. Thomas Cook, one of the longest travel companies in the UK, has just filed for bankruptcy and left quite a few passengers stranded abroad. Now all this sort of adds to the pressure that Prime Minister Johnson's under, and it's really hard to see where he's going to go from here. He just looks a little bit lost and just sort of bungling his way through without any sort of clear direction. Obviously October as well has traditionally been a pretty poor month for stocks, and certainly that's the way it started. It's just going to be very interesting to see how it sort of plays through for the rest of the month. Here in New Zealand, business confidence still pretty low. As yet, we still yet to see the sort of impact of that half-point rate cut from the Reserve Bank. Even a little bit of talk with business confidence still, let's say, very low. Potentially we might see a further cut in November or December. The main reason sort of being spouted for the low business confidence is that businesses just don't have any confidence in the sort of government policies at present. They don't seem to be gaining any traction. There's also a pretty interesting debate as well in terms of sort of monetary versus fiscal policy. As we've discussed here a few times before, with interest rates historically low, maybe it is the time for sort of some infrastructure bonds, etc., sort of be put into place, and some of these sort of projects started. As we've discussed here before, maybe it is a good time for sort of some infrastructure bonds or something globally. With interest rates at record lows, it'll be very interesting to see, sort of raising money, be good for investors, be good for the governments, and good for the economies as well. Now, if you are looking for income options, there's plenty of alternatives available out there. Call us on 0800 867 323. Or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.